Hello, this is The Pitch. I'm Sarah Allen and today I'm joined by Aaron Binsted from Lazard Asset Management. Today we're going to be talking about how you can profit from the next stage of the market cycle. Aaron, welcome.
G'day, Sarah.
So to begin with, where are we in the market cycle and what do investors need to be aware of?
So I'd say first of all, we're really bottom-up fundamental stock investors. We spend our time looking at the drivers of individual stocks rather than trying to make these big macro calls on what's happening to interest rates, inflation, economic growth, etc. But you obviously need to pay attention to the environment you're in. And most of the data we would look at would suggest we still are late cycle. Interest rates have gone up a lot and they're still staying high. We're not yet seeing interest rates come down. And even though we have seen some small improvement in things like PMIs, it still does look more like a late cycle environment to us. And indeed, the leadership you've seen in the equity market would also support that view.
What's the timing do you see for the next stage?
Look, that's so hard to say. I mean, if you go back to the end of last year, just to take one of the most relevant numbers out there, the Fed was telling us they were going to cut 5 times this year, even just a few months ago. And now, as of the more recent updates, they're saying they may not even cut this year, or they might sneak in 1 or 2 at the end of the year. So they clearly don't know what they're going to do. And so, as an investor who's managing capital for people, I don't want to place my bets on making a call on those sorts of things because I don't think you can add a lot of value.
What's the single biggest opportunity you think investors should be aware of at the moment?
So this has actually kind of partly happened, but I think metals were a really big opportunity and still are a good opportunity. They got absolutely crunched last year. Nickel and lithium were 2 that we really paid a lot of attention to. Nickel, you saw 5 Australian mines go broke. You saw some assets go into care and maintenance in lithium, and they've already started to respond quite strongly this year, and we still think there's more to go.
Should investors be considering redeploying their cash out of positions with high valuations?
Look, the first thing I'd say is that spot valuations really don't tell you a lot. You've got to do a lot more work to, what are you paying for? But in general, yes, of course, and we have used these opportunities to do exactly that. To move out of some stuff that's performed and reached our thesis and invest in some new opportunities.
Have you sold or bought in any positions of late?
Yeah, absolutely. So something we've been reducing our exposure is Charter Hall. So we bought that last year when it was sort of $8-9 when bond yields were going through the roof. US yields got to 5%. That's performed really well. We've taken some money off the table there. I mentioned metals. We have invested in a couple of metal stocks. So 2 of note are IGO and Nickel Industries. They're, bottom of the cost curve. They'll continue to make equity cash flows regardless of the cycle. And then some other opportunities too. So we bought Domino's in January after that last downgrade. And Treasury Wine was one that the market was very focused on the negative environment in the US. And in our view was not capturing in the potential upside from China reopening. So that was another opportunity that the market presented to us.
How are you positioning your portfolio for the market?
So I'd say they're kind of 3 buckets. The biggest one that we look at is, as I started with earlier, what stocks kind of have drivers that are internal to the stock and not dependent on the economy. That's the biggest part of the portfolio. Then if you want to look at some other sort of more thematic things, I'd say we really do like insurance. And we still are quite positive energy. So we've been positive on energy for a few years. That obviously did really well in 2022. We sold a lot of our exposure in 2022. We've actually been adding a little bit this year, given energy has not done as well as we think it should. We're not as keen at it as 2022, but we still think it's a good place to be.
Thank you so much for sharing your insights today.
Sure.
If you've enjoyed this interview, please subscribe to Livewire Markets. Thank you for watching.